In the 1990s, more than 10% of Kenya's GDP vanished in one of the most audacious corruption scandals in history, the Goldenberg affair. Kamlesh Patni, backed by powerful government officials including President Daniel Arap Moi, Vice President George Saitoti, key ministers, and even the central bank governor Eric Otut, were all implicated in orchestrating a scheme that siphoned billions through fake gold and diamond exports, crippling Kenya's economy and leaving everyday citizens to bear the brunt of its devastating effects. This wasn't just a fraud, it was the pinnacle of a deeply entrenched system of political and economic corruption. In this episode, we'll delve into the events leading up to the Goldenberg scandal and explore how Patni and government leaders betrayed their nation on an unprecedented scale. If you enjoy the content, be sure to like the video and subscribe to the channel for more captivating stories from Kenya. To fully understand the scandal, we need to go back to the 1980s, a period when Kenya's economy was in a sharp decline. After the initial post-independent economic boom, the country entered what was known as the lost decade between 1980 to 1990. This downturn was marked by government crackdowns, political repression, and the withdrawal of donor support. Poor export performance from leading foreign exchange earners like coffee, tea, and tourism further compounded the economic crisis, exacerbating an already dire situation. During the late 1980s and early 1990s, Kenya faced significant political and economic challenges. President Daniel Arap Moi, who had been in power since 1978, ruled with an increasingly authoritarian grip, leading to political repression and widespread unrest. By the late 1980s, public frustration with unfulfilled promises of freedom and progress made at independence boiled over. Citizens, opposition groups, and civil society organizations began organizing to demand a democratic and accountable government, a movement that became known as Kenya's Second Liberation. The political crisis escalated in 1990 during the Saba Saba protests. These protests demanded political freedoms, an end to one-party system, and constitutional reforms to allow multi-party democracy. Bowing to internal unrest and international pressure, Moi's government repealed Section 2A of the Constitution, legalizing multi-party politics for the first time since the 1982 attempted coup.
Today, ascended to the bill as a sign of my commitment to political reform.
At the same time, donor agencies like the World Bank and IMF had grown increasingly frustrated with Kenya's corruption, which they saw as a major obstacle to sustainable economic growth. As a result, they reduced financial support and imposed structural adjustment programs. These reforms included measures to liberalize markets, remove price controls, and stimulate investment and trade. Two key initiatives aimed at revitalizing the economy were: one, the Export Compensation Scheme, which offered exporters a 20% refund on foreign currency earned through their exports. Two, Pre-Shipping Finance Scheme, which provided loans to exporters before shipment, repayable after the goods were sold abroad. These reforms were designed to boost economic growth and help Kenya rebuild its depleted foreign currency reserves, but ended up being misused to do the exact opposite of the intended purpose. This is where Kamlesh Patni entered the picture. Born in Mombasa, Kenya, to a father involved in the gold business, Patni moved to Nairobi to seek new opportunities. He possessed critical knowledge of Kenya's gold trade and the country's economic woes, and the new policies meant to boost exports and bring more foreign exchange to the country. At just 24 years old, Patni crossed paths with James Kanyotu during a chance encounter while shopping for a suit. Kanyotu, a powerful figure with close ties to Moi, had served as head of the Special Branch, an intelligence unit notorious for political repression, including torture and detention of dissidents at facilities like the infamous Nyayo House. Recognizing an opportunity, Patni cultivated a relationship with Kanyotu and presented a bold idea, capitalizing on Kenya's poorly regulated gold trade to generate desperately needed foreign exchange. Patni claimed that smuggling was depriving Kenya of significant revenue from gold exports. He proposed a solution. By obtaining a gold export license, he could help the government earn 500 million shillings annually in foreign exchange.
In Nairobi, and I met Director of Intelligence. Then I told him about gold. I said, look, there's so much gold flowing through Kenya, but it's nothing Kenya is benefiting. It's not gold. I said, I can create 500 million, every year from this if you do a proper license of this gold. So he took me to President.
But in order for him to do it, Patni requested several concessions: a monopoly on Kenya's gold and diamond exports, an increase in export compensation rate from the standard 20% to 35%, and permission to establish a financial institution, Exchange Bank. This bank became a crucial tool in laundering money as it allowed Patni to move large sums of money through various accounts, making it easy to disguise the illicit nature of the transactions. There was, however, an immediate flaw in Patni's claims. Kenya neither mined diamonds nor had sufficient gold reserves to sustain large-scale exports. Despite this glaring discrepancy, his proposal sailed through with little resistance, setting the stage for what would become one of Kenya's most notorious scandals. In July 1990, Goldenberg International Limited was established, with Kamlesh Patni and James Kanyotu listed as directors. James Kanyotu acted as a proxy for President Moi. This arrangement reflected Moi's deep reliance on intelligence operations during his presidency, making Kanyotu a trusted confidant and key figure in executing Moi's strategic interests. The scandal first started with the export compensation scheme. Goldenberg International managed to secure an export compensation rate of 35%, far above the standard rate of 20%. With the inflated 35%, Goldenberg not only received the coupon amount on the fake deposit slips, but also the extra 35% export compensation. To exploit the scheme, Goldenberg falsified export documents, including fake shipping records, to claim compensation for exports that never occurred. Patni admitted to creating fake foreign companies such as Savino Securities and Solitaire to fabricate the sale of gold and diamond jewelry. These non-existent exports allowed him to approach the Central Bank of Kenya with forged paperwork, claiming compensation without bringing any actual foreign currency. The fraud relied on a network of complicit officials. The Ministry of Mines and Geology approved licenses for trading and exporting these commodities, even though there was no legitimate production. The Customs and Excise Department signed off on export processes despite the absence of physical goods. Crucially, the CBK governor ensured the smooth disbursement of compensation funds, which were approved by the Minister of Finance. This coordinated corruption enabled Goldenberg International to siphon at least 7 billion from Kenya's public coffers. At the center of the scheme was a very paranoid president whose concern about losing the 1992 upcoming presidential election made him increasingly dependent on figures like Putney.
So before I became advisor to the president, President Moi.
A significant portion of stolen funds was funneled into Moi's party, KANU, to finance its campaigns.
It's believed businessman Kamlesh Putney donated over 11.2 billion shillings through his company, Goldenberg International.
Putney played a key role in funding political activities, including the operations of Youth for KANU, also known as YK92, a faction led publicly by Cyrus Jirongo to mobilize the youth, but managed behind the scenes by Kenya's special branch.
This was an amorphous thing, and if you understand how the government operates, YK was operated by the intelligence of the country. YK was operated by State House. YK...
So you are just figureheads.
Using money from the scheme, YK92 campaigned aggressively, mobilized voters, and intimidated opposition members.
And then comes YK92, and the thing that they were selling was money. They had loads of cash, mobilized young people on the basis of what they were offering, but the currency was not ideas. It was just trading on cash. Okay. And I think it has had an impact in our politics. And money becomes such an important factor in modern day Kenya politics.
The next part of the scandal was the pre-export finance scheme, which was designed to help exporters in Kenya by providing them with loans to cover production and shipping costs before their goods were sent abroad. The goal was to stimulate economic growth and encourage exports, an easy target for fraud, and it was soon exploited on a massive scale. Putney, through his companies, turned the scheme into a major scam. He used fake export documents, including bogus contracts, invoices, and letters of credit to get loans from several commercial banks. Among the banks defrauded were Trade Bank Limited, National Bank of Kenya, Delphis Bank, and Postbank Credit Limited. The banks failed to carefully check the documents Putney provided. They assumed the documents were genuine, especially since they had been signed off by senior government officials. This lack of scrutiny allowed Putney to secure multiple loans from different banks using identical fake documents. The scale of the fraud was so vast that it went undetected for a long time. Some officials in the Central Bank of Kenya and the Ministry of Finance either ignored the fraud or actively helped Putney's operations. Through this elaborate scheme, Putney and his associates defrauded banks of over 3 billion shillings. Goldenberg didn't pay back many of these loans, and nothing was ever exported, so no foreign exchange was generated. The fraud didn't just hurt individual banks, it caused widespread instability in Kenya's financial system. At the same time, Kenya was close to the 1992 elections.
President Moi is still refusing to set a date for what could be Kenya's most crucial election, yet he is already out on the hustings. For the first time, he is having to seek a vote of confidence from his people. It was only international pressure and the suspension of vital foreign aid which persuaded President Moi to legalize rival political parties. In the 10 weeks since that decision, the opposition has mounted a major challenge to Moi's supreme rule.
And the opposition was becoming increasingly divided. The Ford Party, which had led the push for multi-party politics, split apart. Mwai Kibaki also left the government to form his own party and run for president. This fragmentation of the opposition helped Moi secure a controversial victory. However, even after the elections, the plunder of Kenya's resources continued unchecked. Another scheme meant for positive impact that was abused was the Forex convertible bearer certificates. These certificates were introduced in 1991 to bring more foreign currency into Kenya. The idea was to let people exchange foreign money for Kenyan shillings without having to explain where they got the money from. This aimed to legalize the inflows of foreign currency even from unofficial or illegal sources. The certificates could be traded freely and redeemed at market exchange rates. To make them easy to use, no ownership records were kept, meaning anyone holding a certificate could cash it in. However, this anonymity made the system easy to exploit. At first, the Forex seize was seen as a way to strengthen Kenya's foreign currency reserves, but the system quickly became a tool for fraud. Many certificates were issued without any real foreign currency backing them. Worse still, when certificates were cashed in, they were often not marked as cancelled. This allowed the same certificates to be reused, making it look like more foreign currency was flowing into the economy than was actually the case. The Central Bank of Kenya, which oversaw the scheme, failed to keep it under control. The bank paid inflated rates to certain institutions, especially Exchange Bank, which was deeply involved in fraudulent activities. Large amounts of money from the scheme were sent out of the country instead of helping the local economy, defeating the program's purpose. The abuse of these Forex certificates caused severe economic problems. It flooded the market with local currency, leading to runaway inflation and a sharp drop in the value of the Kenyan shilling. By 1993, the scheme was shut down, but the damage was done. Inflation soared to about 46%, and Kenya's financial stability was in ruins. Government parastatals were on their knees, as many needed to be privatized to survive, like some of the cases we've covered on the channel, like Mumia's Sugar, Uchumi, and Kenya Airways, while others entirely collapsed, like the Kenya bus services, leading up to the rise of matatus. This exposure forced President Moi to act. The Export Compensation Scheme, Pre-Export Finance Scheme, and Forex seize were officially withdrawn in 1993. You'd think it would end there, but Patni still had other schemes up his sleeves. He turned to check kiting. Check kiting was another critical element of the Goldenberg scandal. It took advantage of the time delay between depositing a check and the actual transfer of funds. Kamlesh Patni and his network exploited this lag by depositing checks across multiple banks and receiving same-day credit before the funds were cleared. He was basically writing a check with more money that was in the actual account and using it in the other account before the check was cleared. This created the illusion of available money, allowing them to withdraw funds or issue more checks, keeping the fraudulent cycle going. The scheme became widespread in 1993, especially during Patni's takeover of Pan-African Bank. Several banks were duped into accepting these kite checks, which appeared legitimate but were not backed by actual money. The scale of the fraud was immense. In April 1993 alone, 18 kite checks totaling about 10 billions were circulated. The money generated through check kiting funded significant transactions and acquisitions. For instance, Patni used the scheme to repay a 4.5 billion overdraft owed to the Central Bank of Kenya by Pan-African Bank as he wanted to acquire it. This repayment paved the way for him to acquire substantial assets, including the Grand Regency Hotel, and solidifying his control over Pan-African Bank. It wasn't until David Munyakei, a senior official at the Central Bank of Kenya, discovered the fraud and blew the whistle that the Goldenberg scandal came to light. Munyakei leaked critical information to Nation Media Group, who was the first to publish the story. The leak sent shockwaves through the country, reaching both the opposition leaders and the public, who used it as a tool to expose the scale of fraud in parliament. The Goldenberg scandal, one of Kenya's most infamous financial crimes, left a legacy of corruption, betrayal, and ruined lives. But despite the massive fallout, justice remained frustratingly out of reach. It took over a decade after the scandal's exposure for meaningful investigations to begin, finally gaining traction during Mwai Kibaki's presidency. The Judiciary Commission of Inquiry, chaired by Justice Busire, aimed to untangle the intricate fraud. Yet, despite its efforts, it fell short of holding anyone accountable. The Goldenberg Commission of Inquiry, launched in 2003, cost the Kenyan government a staggering 700 million Kenyan shillings. Ironically, the only person to serve any time in connection with the scandal was the whistleblower David Munyakei. For his courage in exposing the fraud, Munyakei was fired and was in custody for some time. He passed away quietly, his sacrifices largely unacknowledged. A sobering testament to the personal cost of integrity in a corrupt system. Despite Kibaki's rise to power on an anti-corruption platform, he took no legal action against the former president Daniel Arap Moi or his vice president George Saitoti for their alleged roles in the affair. Meanwhile, Kamlesh Patni, Goldenberg's mastermind, rebranded himself as Brother Paul after a publicized religious conversion. His attempt at a political career flopped, leading him to eventually flee Kenya.
This man is a thief. You may get away, but you know you're a thief. You're an economic thief and you know you're a thief. Our generation will tell you, he's a thief. This man is a thief. You are a thief. You're a thief and you know it. Kamlesh is a thief. You're a thief. This guy's a thief. He stole billions of taxpayers' cash. Shame on you. You may find the court, but we'll tell you in our generation because you're a thief. Kamlesh is a thief. You're a thief. And we know it. Kenyans know you stole billions and you got away. Huh? When a pastor up, you're a thief. You may find the courts, but you know you're a thief.
Patni later re-emerged in Zimbabwe, implicated in gold smuggling and money laundering schemes that attracted the attention of the US and the UK authorities. Other major players also evaded justice. James Kanyotu, the former intelligence chief, died a very wealthy man, leaving behind luxurious estates, including the stunning Sovereign Suites and Spa, which used to be his house. George Saitoti died in a mysterious helicopter crash, and Daniel Arap Moi lived out his days untouched by any legal consequences, passing away in 2020. The biggest tragedy is that not a single person was held accountable for Goldenberg, leaving it as one of the most glaring examples of government betrayal in Kenya's history. Many people who were summoned blamed Moi and said they were just following orders. Moi himself never testified on the matter as he was never summoned. There were other schemes Patni used to steal from Kenyans, but generally that's how he helped the government steal from its own people using Goldenberg International. If you enjoyed this video, give it a like and subscribe to the channel. I also want to say a big thank you to all the support recently. We're almost at 12,000 subscribers and I'm truly grateful. If you enjoyed this video, then I'm pretty sure you'll enjoy the rise and fall of Kenya Airways, and if not, I'll see you in the next one.